Everyone tells you to buy in the safe, Tier 1 cities. They're wrong. If you're chasing maximum capital appreciation by 2026, the big hubs are no longer the gold mine, they're the bottleneck. High entry costs and compressed cap rates are eating your margins alive before you even close the deal. We've spent months analyzing migration patterns, job diversification reports, and price-to-rent ratios across the entire country. We aren't looking at where people were asterisk. We are looking at where the high-earning workforce is moving now asterisk. Today, we are pivoting. I'm revealing 5 under-the-radar, mid-sized hubs primed for a massive boom by 2026. These are cities with low entry costs, aggressive corporate migration, and the perfect setup for long-term wealth. By the end of this video, you'll have the exact blueprint to stop overpaying for safe bets and start investing in the next great American growth engines. Most investors follow the same outdated playbook. They look at the big names. They think safe means a Tier 1 city. But here is the cold truth: safe is a trap. You're fighting over crumbs. You're bidding against institutional hedge funds and private equity firms with bottomless pockets. The result? You pay a massive premium for a property that barely cash flows. You're praying for capital appreciation, but the prices are already peaked. You're essentially betting that the market will somehow climb higher than an already inflated ceiling. That's not strategic investing. That's gambling. While you're stressing over a 3% cap rate in a crowded city, the real wealth is being built in silence. The smart money has already pivoted. They aren't looking at the landmarks. They're analyzing migration patterns, new corporate headquarters, and massive infrastructure spends. If you keep following the herd into these overpriced hubs, you aren't building a legacy portfolio, you're buying a liability. By 2026, the gap between the Tier 1 traps and the emerging mid-sized boomtowns will be a canyon. If you're still holding those safe assets, you'll be the one paying the premium just to exit. Here is the secret the gurus won't tell you. Wealth isn't made by buying in the most expensive city. It's made by buying in the city that is asterisk becoming expensive. By 2026, the Tier 1 trap will be tighter than ever. Overpriced homes, razor-thin margins, high taxes. If you want massive capital appreciation, you need to follow the migration. You need the Goldilocks markets, mid-sized cities with high job growth, low entry costs, and a desperate need for quality housing. Let's dive into the 5 bets for 2026. Number 1, Huntsville, Alabama. This isn't just a quiet town. It's a powerhouse of aerospace and defense. We're seeing a massive influx of high-earning engineers and government contractors. The result? A surge in demand for professional-grade rentals. The entry price is still a fraction of a coastal city, but the income ceiling is climbing fast. Number 2, Columbus, Ohio. One word: semiconductors. With Intel pouring billions into the region, thousands of high-paying jobs are landing here. History shows that when a massive tech hub moves in, the surrounding residential real estate explodes. Get in now before the Intel effect fully prices out the average investor. Number 3, Greenville, South Carolina. Greenville is the epicenter of the new manufacturing renaissance. Between BMW and the new EV battery plants, the job market is bulletproof. You've got a perfect storm, a growing workforce and a lack of modern housing. This is where you find high-yield long-term rentals. Number 4, Indianapolis, Indiana. This is the safe haven bet. Indy offers some of the best price-to-rent ratios in the country. It's a logistics hub for the entire Midwest. While it doesn't have the hype of a tech city, it has stability. For investors seeking passive income without the volatility, this is your spot. And number 5, Knoxville, Tennessee. Knoxville is seeing a massive lifestyle migration. People are fleeing the north for the mountains and the lack of state income tax. Combine that with a growing medical hub, and you have a recipe for long-term appreciation. Now, you can't just guess which house to buy. To actually scale this, you need data. Use PropStream to find motivated sellers in these hubs. Run the numbers through DealCheck to ensure the cash flow is real. And if you don't want to manage a property from 3 states away, look at Roofstock for turnkey options. The window for these 2026 bets is open, but it's closing fast. Now, knowing which cities to target is only half the battle. The real money is made in the execution. If you want to find these off-market gems before the masses, use PropStream. It's the gold standard for data. Once you find a lead, don't guess the numbers, you still check. It turns a maybe into a mathematical certainty in seconds. And for those of you who want zero landlord headaches, Roofstock is your shortcut. Buy vetted tenant-occupied properties in these growth hubs without ever boarding a plane. This is exactly how elite investors scale their portfolios while keeping their day jobs. Stop guessing and start calculating. All 3 tools are linked in the description below. Grab them now and start building your 2026 portfolio today.